Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. This content is brought to you by Uphold, which makes crypto investing easy. I've been using Uphold since 2017. You can buy, sell, trade, and earn cryptocurrencies in Uphold. You can also trade precious metals and equities. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto, not your keys, not your coins. If you'd like to learn more, please visit the link in the description. All right, my friends, we got Charlie Munger, the dinosaur himself. Yes, that Charlie Munger, the billionaire who's friends with Warren Buffett and who have been spreading FUD about Bitcoin and crypto for years. We know they absolutely hate crypto and they continue their FUD campaign. Here we have an article published in the Wall Street Journal opinion section by Charlie Munger. Here's the title: Why America Should Ban Crypto. Here's the subtitle: It isn't currency. It's a gambling contract with a nearly 100% edge for the house. So this article is behind a paywall, so I'm not going to be able to read all the details. But as you can imagine, it's the same talking points. It's a different year, but the same talking points. They hate crypto. Charlie Munger and Warren Buffett have said a lot of things about crypto. They've said it's stupid. It's a scam. Warren Buffett has said Bitcoin is rat poison squared. Charlie Munger has compared Bitcoin to a venereal disease. I mean, these are the things coming out of the mouths of these two old dinosaurs, right? And don't get me wrong, I respect them as investors. They have made billions of dollars, so I absolutely respect them. But they are absolutely wrong here. Folks, they're getting disrupted. There's two possible scenarios here, and I think the first is the most likely. They're getting disrupted. Capital's leaving their traditional investments and going into crypto. They don't like that. They've made money off the status quo. They've made money off of stocks and the money printing over the years, right, by the Fed. And they at one point, Charlie Munger just recently was praising communist leader in China because they banned crypto, right? So they made money off the traditional markets. But think about it. Why would two billionaires in their 90s be out there, talking such bad things about crypto and Bitcoin, right? Saying it's evil, it's stupid, it's a venereal disease, it's rat poison squared. Why? Think about that. One is, once again, they could be getting disrupted, so they don't like that. Two, it's very possible that they are putting out the FUD out there and, maybe they're shorting and also accumulating, right? We wouldn't know until they flip their narrative and reveal that they have been taking a position. So there's two scenarios at play there. I think the first is most likely that they just hate it because it's a disruptor. And we've seen throughout history, new technology has caused the incumbents to go crazy and they start spreading FUD. They did it with the light bulb, the electricity. The candle makers didn't like that. We know that the horse and buggy folks didn't like the automobiles. And if you go back and look at the literature, the headlines, the cartoon work, right, or the drawings that they did for media back then, it was showing that people would die from the electric wires, that cars would be flying down 50 miles per hour, killing people and so forth, right? They really sensationalize the things to make it paint this negative picture that folks should not want to adopt this new technology. But we've seen throughout history, disruptive technology always wins. They can't stop it. No matter how much they cry and they fight and they yell and all that, right? They can't stop it. The same thing happened with the internet in disrupting a lot of industries. And, the saying goes, first they ignore you, then they laugh at you, then they fight you, then you win. I think we are in the then they fight you phase, and we see Charlie Munger ramping up here his FUD and the fact that he's taking time out of his day. Once again, this is a billionaire in his 90s. Why the hell would you be wasting your time doing this, right? he should be relaxing somewhere on an island or whatever it may be. They've made so much money, but they know in order for their business to continue, they have to adopt crypto. They don't want to because they've made money off the legacy financial markets, but times are changing. The new tech is here. So Charlie calling for the outright ban of crypto. But here's an example of how things are moving beyond, ahead of Charlie Munger and Warren Buffett. We have big names, big institutions like BlackRock, BNY Mellon, and so forth who are adopting crypto. Here's recent news from BNY Mellon. BNY Mellon names digital assets CEO. BNY Mellon seeks to accelerate its efforts in the sector after launching a digital custody and administration platform in October. Many of you recall just last year in Q3, or I should say Q4, the America's oldest bank and largest custodial bank, they launched crypto custody. So they have assigned a CEO, my friends. This is pretty cool. So BNY Mellon named Caroline Butler as its CEO of digital assets Thursday. The post is a newly created role for the bank. Roman Regelman, CEO of BNY Mellon Securities Services and Digital, said in a statement that Butler would lead their enterprise-wide initiatives as the company accelerates its efforts around digital assets and other emerging technologies. So this is the stuff that Warren Buffett and Charlie Munger don't like, right? Capital and resources are leaving the traditional markets, going to the new asset class and technology, crypto. They don't like that, guys. Of course they don't like it, right? You see BlackRock, the world's wealthiest asset manager, also doing this. So clearly these businesses, these traditional institutions recognize the disruption that's happening, and they're jumping on board. So here's another quote. As institutional adoption of digital assets continues to evolve, we are committed to being a trusted provider of services to the broader financial ecosystem, Regelman said, or added. A spokesperson declined to comment further. Butler, who joined the company in 2020, was previously CEO of the bank's custody services. In that role, she led development of BNY Mellon's digital custody and administration platform for traditional and digital assets. So things are moving ahead. Despite the FUD from Charlie Munger, things are moving ahead. Here's another example of how things are moving ahead. European Union Bank again uses Ethereum to explore tokenized bonds. So we saw that different governments and so forth are testing tokenization on different blockchains, right? They're doing CBDCs, they're building stable coins, they're tokenizing different financial products like bonds and so forth. So the European Investment Bank deployed a Eurobond on Ethereum back in 2021, but this time it's only using the network for record keeping. So you're going to see a lot of testing of the different blockchains out there and a lot of piloting, and this is the future, tokenization. So the European Investment Bank is once again leveraging Ethereum in its quest to tokenize capital markets, this time while issuing the first ever digital pound sterling bond on a separate private blockchain. The EIB, the primary lender of the European Union, deployed 50 million euros, which is $86.6 million bond to a permission network underpinned by HSBC's tokenization platform, Orion. The EIB is a public institution owned by the EU's 27 member states. The bank opted for a private network for privacy and efficiency, according to a statement. In an effort to increase transparency, the bond was also recorded on Ethereum, a spokesperson told Blockworks. This was done to provide evidence that the issuance took place while still maintaining the anonymity of bondholders. Blockworks reached out for some transaction IDs, but they weren't readily available. We'll update this piece should the EIB provide them. HSBC debuted Orion last November when it first flagged intent to launch the tokenized GBP bond. BNP Paribas, HSBC, and RBC Capital Markets were named as joint lead managers of the bond, with those firms serving as custodians. Clients' assets will be stored in digital securities accounts kept on Orion, the bank said. Folks, do you see what's happening here? Ethereum. They're doing this on Ethereum, on a token that you can hold, the token of the native blockchain Ethereum. You can hold that Ether token. Notice what's the theme here? Tokenization. What have I been telling you all? We're headed to the token economy. Those of you still on the fence, wake up. Wake up. Look at what's happening here. And never before in the history of investing have you been able to front run institutions and many of these governments to hold the asset. So these blockchains, as they get adopted, the network effect, the growth and adoption of the blockchain the value will trickle down to the native token, right? And the value of the entire network will increase. I hope you are understanding why tokenization and building on blockchains is key for the assets that you hold. That's why I hold Ethereum in my portfolio. I hold Algorand, XRP, Cardano. Some are going to be losers, some are going to be winners, but I'm looking for adoption, real world partnerships, and Ethereum is clearly getting real world adoption. That is why I hold it in my portfolio. I am bullish on it. I continue to dollar cost average into it, and I also stake Ethereum. So really, really big news here, guys. Not just for Ethereum, but just in the direction we're headed. The fact that they're tokenizing bonds on a blockchain. Come on, man. I hope you guys see it. This is huge, huge, huge adoption news. Now, we got some big Coinbase news here. Judge dismisses proposed class action lawsuit alleging Coinbase sold unregistered securities. The customers also accused Coinbase of failing to register as a broker-dealer. So let me give you the details here. U.S. District Court Judge Paul Engelmayer has rejected claims in a proposed class action by customers who claim Coinbase sold them unregistered securities and also failed to register as a broker-dealer, according to a filing on Wednesday. The case is Underwood versus Coinbase Global in the Southern District of New York. Coinbase CEO Brian Armstrong was also named as a defendant. The New York-based judge decided to toss out the lawsuit after finding that the plaintiff's claims made in their amended complaint filed last March added numerous allegations that directly contradicted their initial complaint. Though the dismissal of the Underwood class action suit is a victory for Coinbase, the publicly traded US-based crypto exchange is still playing whack-a-mole with other class action cases in various states, including Georgia and New Jersey. So, this goes back to we don't have regulatory clarity and as to what is a security and what is not. And the SEC just goes around, using regulation by enforcement, and they like it that way so that they can, shake down companies for more money. And that's a sad situation because, a lot of entrepreneurs and companies want that clarity to build and not have to worry, right? They want to work with the SEC, but the SEC doesn't want to work with them. So the fact that the judge threw this out, that's a good sign and some good news here. Now, speaking of crypto regulations, we got some reports here from Eleanor Tourette of Fox Business, who said that ranking member Senator Tim Scott out of South Carolina of the Senate Banking Committee has released his legislative and oversight agenda, which includes developing a framework for crypto and reining in the Biden admin's use of federal agencies to advance a progressive agenda. So, we're seeing different members of Congress coming out here and proposing stuff for crypto regulations. So, despite the whole FTX situation last year, I think there are many members of Congress who want to get this figured out. So hopefully they can get the numbers of Congress on both sides of the aisles, right? Bipartisan, Democrats and Republicans to work together to get comprehensive regulations passed soon. But, we'll have to wait and see. Now, Cody Carbone of the Digital Chamber of Commerce tweeted out something yesterday that I want to share with you guys with regards to what states are doing. States are increasing their rulemakings, enforcement actions, and overall activity as it relates to crypto in the absence of federal action. So this is another symptom of the federal government, Congress not acting. States are going to have to start moving and doing their own things. That's not great, right? Because some of them are just going to do draconian things while some may be good, like Wyoming is good, Florida, I believe, is good as well. Texas is good as well. So here he says, we are starting to see a patchwork of licensing regimes from New York and LA, or Louisiana, Louisiana, with other states not far behind New Jersey and California. What does this mean? He says here, maybe disparate state licensing regimes will create a federal standard that preempts the states. However, that's failed to be a motivating factor before. Look at CCPA and federal data privacy. Preemption is needed to avoid the forthcoming patchwork. Let's hope, fingers crossed. So essentially he's saying, once again, these states are going to do their own thing. One state may be pro crypto, one will be, not for crypto. And that just creates a lot of confusion. But if the federal government was to come out, Congress was to act and provide clear regulations across the board, then states can all use the same framework. So this is why we need comprehensive regulations, man. It's going to get really murky, and crypto companies may have to leave states and go to the other and keep jumping around. It really puts innovation, entrepreneurs, and so forth in a bad spot. So we'll see what happens. Now, the UK continues to make progressive progress here with crypto regulations. They are doing the right thing. And Danelle Dixon, who is the CEO and executive director at Stellar Development Foundation, she tweeted out, the UK government's proposals for crypto regulation show a step forward. I know industry and government can come together to create clear, robust, and reasonable regulation that supports industry growth while holding bad actors accountable. Increased consumer protection shouldn't come at the expense of innovation. She's absolutely right. Nor should innovation put consumers at risk. Absolutely. We'll continue to be she says, we'll continue to be an eager partner as the UK continues to move forward, and hopefully more governments follow suit. So the UK is getting it right. We need the United States to get it right. My goodness, we're really behind here. I'm optimistic they will. The problem is how long. We can't wait more. 2 to 3 more years. They have to get something done this year. Now, I'm an HBAR holder. Many of you know about that. I'm bullish on Hedera. The HBAR Foundation tweeted out the following here. We're excited to announce our support of Humans.ai, which is a heart-driven AI helping humans create AI NFTs and run them as companies. The European deep tech startup to bring AI NFTs wrapped from Ethereum to the Hedera network, enabling them to benefit from the efficiencies of Hashgraph. So great news here as far as adoption of the Hedera network. And once again, more building, more adoption of the blockchain or the network brings the value of the token up. So you want to see building and adoption and utility on these respective blockchains. Finally, Jack Dorsey backed Web3 app aims to disrupt Twitter. Dorsey described Nostur's app launch as a milestone for open protocols. So I think as we move more into Web3, we're going to see decentralized social media, because Facebook, Twitter, Instagram, and so forth are Web 2, and they have their flaws, right? But I think we will see better social media in Web 3 using blockchain tech, using NFTs. So less bots, less scams and spam and so forth, and people being able to control their identity. Having it on the blockchain, they get to control that data and their followers and all these things better. So new decentralized social network protocol Nostr officially went live via mobile app stores on Wednesday. Nostr, which stands for Notes and Other Stuff Transmitted by Relays, aims to create a censorship-resistant global social network where users are identified by a public key rather than a name or user handle like most social platforms. Here's a quote. It doesn't rely on any trusted central server, hence it is resilient. It is based on cryptographic keys and signatures, so it is tamper-proof. It does not rely on P2P techniques, therefore it works, its GitHub page says. The protocol gained popularity after an endorsement from the former Twitter CEO Jack Dorsey, which enabled its mobile app Damus to hit its beta testing limit before its open launch in the Apple App Store and Google Play Store. Nostr is similar to Twitter, meaning that users can publish posts, like them, follow the people they want, and report content posted by users. And just like posts on Twitter are called tweets, Nostr calls them a note or just posts. So Dorsey, chief executive officer at Block, donated 14 Bitcoin, which is worth $245,000 at the time, to Nostr last year to fund its development after pointing out flaws in traditional social media. He also specifically mentioned the 280 character limitation on Twitter, which is not a feature on Nostr. He hailed its launch on Apple's App Store as a milestone for open protocols. So we've seen also notes here that Nostr is supported by Bitcoin maximalists, and although it isn't built on Bitcoin blockchain, it supports payments over Bitcoin's Lightning Network. So this is pretty cool, guys. I think we're going to see a lot of new tech in Web3, and a lot of Web2 flaws will be addressed and fixed in Web3. So pretty exciting. And we'll see how the incumbent social media networks adapt to this, right? And because I think what will be triggered to drive people to these decentralized networks is that they can own their data better, have better privacy, less censorship. And I think if crypto is involved with tokens in some way where they're incentivized to post, they're rewarded for posting, that's going to be big. That's going to want people to go to those platforms and participate. Because right now, these social media platforms, they don't give you anything. They just monetize your activity, your content, your data, right? You post something, you share something, they make the money, not you, right? But if you can get share in the tokens and the equity of the blockchain, so to speak, that's going to be a strong incentive for many folks. Now, don't get me wrong. These platforms actually have to work well. They have to be able to function well, like Twitter and Facebook and so forth, so that people, have a good experience. So they have to have good UX. But if these platforms can get it right and put the incentive, people will move to this and be on, once again, on the blockchain-driven platforms. So that's the future. Anyway, guys, let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.